I would like to welcome Michael.
Hey, nice being here. Thanks for having me.
Thanks for taking the time. So Michael, please tell us a little more about yourself and about Grover.
Sure. So yeah, I'm the founder of Grover, and Grover is the buy now, pay later 2.0 solution. We call it UNPL, use now, pay later, where our customers can enjoy the benefit of not paying upfront the high purchase prices, but also as a result, not commit to long-term debt financing for the things that they want to have access to. And we offer a flexible subscription, flexible monthly rental on the entire consumer electronics and tech category in Germany, Spain, the Netherlands, Austria, and now recently also in the United States. So our customers can choose any product from across 11 categories, over 3,000 SKUs, and each product will have a minimum rental period of 1, 3, 6, or 12 months. And the longer you pre-commit, the cheaper your monthly price will be.
Exciting. Can you maybe share a few stats and numbers about the company and where you stand in terms of the customer base?
Absolutely. So Grover today is Europe's leading tech subscription platform. We share our numbers also publicly, now over 120 or 30 million in gross ARR, growing over 2 to 2.5 x year over year. So we're really compounding our growth, and yeah, we see phenomenal retention. We see great net promoter scores as well, and we actually see that we provide a true benefit to our customers, which is making access to the things that they need in their lives very easy, simple, and intuitive, right? So you do business with Grover, you get access to a MacBook or any other tech you may need, and you're not in debt for the next 4 years, and you didn't spend those several thousand euros, for yourself and maybe your kids and so forth. So it really has a big enablement element, and what we can judge from the feedback that we also get is that we're actually bridging the tech divide, and given that the internet is really this participation element today, technology has become the window to the internet, and providing easy, simple access at the press of a button to tech products has become quite a crucial and critical part of everyone's life. So we really want to simplify this part of the experience in everybody's life, which is how do you access your tech.
Yeah, I think with those impressive numbers, you seem to really be addressing a customer need there. When you look at the market for these devices, do you think you're creating a completely new category there, or are you seeing already a lot of competitors who are basically adopting the same model, which is subscription based rather than the more traditional buying of devices?
Yeah, so we do see, I think the competition comes mainly from balloon financing offerings, where there is a bank, a subscription provider, a trade-in partner, and a retailer, like all 4 parties partnering up to offer a single customer on a single product, kind of a combination of a 3-year loan or 2-year loan. But when you return the product, we credit you 300 euros and whatever. It's complicated, right? So Grover is this 3 points in one solution, if you will. Distribution and access like a retailer, leverage like a bank or buy now pay later provider, because people don't need to pay upfront. And then number 3, the trade-in partner. You just go to your dashboard, return the product, Grover refurbishes it, and then sends it out to the next person. So we see some movement in the market. We see also a lot of movement in the B2B space. So today, over 12% of our revenue and customer base is within business customers. So we see that companies are also looking to transform this high spend CapEx into OpEx on a monthly basis for all of their employees. And we see quite some competition there. But I think we're growing quite faster, and yeah, we have good product plans as well. So yeah, that's it. I think we're definitely the first mover, and But given how, you know, we're approaching the market, I think there's a big benefit of moving really fast here.
100%. And there's another big buzzword in the industry at the moment around circular economy. How do you see this tying into your business model?
Yeah, so funny enough, we have been nominated part of the global 100 companies as part of the circular economy, the CE 100. There's this Ellen MacArthur Foundation that you know, awards this prize, and Grover has been awarded the prize ever since I think 2016, right? So it's like Philips, Apple, Google, and everybody tries to come up with some circularity into their otherwise linear business model. But we've been at the forefront of that since the very beginning, right? Which by the business model nature, we have a commercial incentive to circulate products for a very long time, and just to keep refurbishing them and keep repairing them, and then, you know, being able to address another customer, maybe at a different price point and so forth. And it turns out that this is quite a sustainable undertaking. It turns out that this is quite reducing technology waste as well. So we recently hired we're fortunate enough that really a top head of sustainability has joined us. Yeah, we really want to get to the bottom of the specific benefits that our business model provides to the reduction of tech waste, right? And we don't want to be one of the companies that just, you know, gets a green label from a, you know, I will give you a green label startup, you know, and then it's McDonald's, Burger King, and Grover, they all look the same. We don't want that. I mean, we can do this too and, you know, contribute, but we also want to specifically understand how our circular business model and how the circularity of the business model in reducing tech waste specifically contributes to tech waste reduction. Because what ultimately happens, and by the way, this tech waste reduction is a tech waste not only for the environment, but also for the person, for the people. What happens is people buy things, but typically they're finance things. So for every product that lands in a drawer, over 50% of people still have a financing that's running against that. Think about that. Like everybody's almost paying for something then they no longer get any value of. This is a unique feature of consumer finance, that you end up paying for stuff that have no value to you. That's really crazy. And we're here to fix that quite forever, actually.
Yeah. And besides the sustainability aspect, where you seem to be one of the drivers of change, Grover, I think, is also one of the, let's say, leaders when it comes to embedded finance and in a way paving the way there. Maybe you can share a little bit more about your underlying rationale for now pushing into financial services and what you are aiming for with the Grover card. Yeah, so look, the Grover card has been on my mind since 2016. And I think when you are talking embedded finance and so forth, you will always face the challenge of growing your core business versus distracting your core business whilst introducing some really odd new features. And believe me, half the company and definitely over half of the investors will not understand why and what are you doing there and so forth, right? So yeah, it definitely takes some conviction. But I think for me, it was really clear that the decision to subscribe to something monthly and to rent something is a leverage decision. It's a financial journey decision. Is you are deciding to not finance this product. You are deciding to not spend the cash outright, but to access it very differently. So we are right there already in your financial journey on how do you spend your budget optimally. This is it, right? And with this decision, it's clear that that you know we're looking at the whole fintech market with just a very different approach to it, right? So the one approach is you distribute free cards to everybody, and then somebody converts to pay you 10 euros a month for the card and so forth. Or you start with the real business model, but we start with a core business model that provides instant relevancy and differentiation to the customer, and then you can build up other financial products just on it, right? And I think you've had this question to before. I think financial services are becoming quite commoditized these days, right? Both in terms of revenue generation, but in terms of also ability to plug them in. So I think it's the journey from
you have a core business with product market fit, and then you introduce financial services to increase retention, brand awareness, brand equity, and relevancy into your customer base, has more promise than trying to innovate a new business as a financing provider to start with. You probably lack that innovative force to create something completely new from scratch. So the financial services are much more standardized, much more commoditized as well, that it allows people who have innovated a new business model to plug them in much more easily, I think.
And if we now move one level deeper and look at the value proposition you have there with the Grover card, what are the actual benefits that your customers, the Grover customers, are getting with this new Grover product?
So the Grover card today in Europe offers the highest cashback, bar none. So 3% cashback. Nobody offers that in Europe. It's the highest cashback card. The issue is, or not issue, but you got to be a Grover customer to enjoy that cashback. So you can use it on your subscriptions. But think about it. You spend your money normally, and suddenly your iPhone is for free, right? Or you get 20 euro deduction from subscription A and subscription B, right? So you make your technology, your tech access even cheaper. And what it means is that the delta between the value you get and what you pay for it is increasing to the benefit of the customer, right? So we are increasing the ecosystem value of Grover with this offering by making it more valuable to our customers, right? And as a result of having a offering that is increasing in value for people who use Grover frequently, right? And who use the card frequently and have a lot of brand exposure and so forth, we believe that this will also drive more loyalty and retention and be like a win-win situation for everybody. So Grover is in a unique position to combine these two elements, to offer customers products and deals in the market that otherwise do not exist, by being able to pair it with the core business that benefits from the exhibited loyalty on it.
Yeah, I think loyalty and retention and customer data are often the, let's say, key drivers and motivation for many non-bank players now moving into financial services. Now, I know the, let's say, launch of the Grover card is still fairly fresh, but maybe you can share a few insights on the feedback from the market and how this product is received by your customers. Are the customers actually already fully ready to consume financial services from?
Absolutely, yes, absolutely. Our waiting list is growing super fast. We have like, I think, over 15,000 people now on the waiting list. It's, I think, like a 50% week-on-week growth, right? So it's growing really fast. That's one thing. The other thing is we have some early usage stats now, and it looks like the Grover card user has twice as many subscriptions as the non-Grover card user, which would be phenomenal, obviously, if this plays out also long-term, because then we have something that is really able to iterate on. We understand the Grover card user, and we can introduce more benefits for the people. So the early data is great, phenomenal. But to be honest, it's been also underpinned by all the the research and the kind of the evolving partnership that we've had on the journey with Solarisbank and Visa and so forth. We're really happy that it's working really well, but we're not precisely surprised, I would say.
Yeah, sounds like you're really delivering on the embedded finance playbook there in terms of the effects that you're seeing. I will with this now look at the questions from the audience, and the first one we are receiving is, what are the most popular products at Grover?
So it's smartphones and tablets. So essentially, you can split Grover into across all of these categories into 3 buckets, right? You have smartphones and tablets, you have laptops and computers, and then you have mostly everything else.
And looking at my next question, how many times are devices refurbished and used for a new rent?
So we have instances where we have up to 8 customers on a single device sequentially over multiple years, right? So up to 8 over a period of 4 to 5 years.
And looking into the future, you've now started with the Grover card. does the, let's say, financial services journey stop there, or do you already have plans going beyond that? For instance, maybe launching a full bank account at a later stage. Is that also an option?
Yeah, well, let's see. I think we have several options to expand on the Grover card usage, right? So right now it's really iterating the offering, understanding the usage and so forth. But look, we already had in the LinkedIn post, we already had our business customers reaching out. Like, is this available for businesses too? So, okay, interesting. Then we have customers in other markets reaching out. Hey, can we use this internationally? All right. So suddenly you have already 2 interesting points on your roadmap, but just by inbound from your customer base, right? And then there's the usual looking into the financial space, the fintech services space, and say, okay, what other products could we offer that are highly relevant for our customers and easily, integratable with our offering, right? So it's no secret that the Grover card, you see all these transactions and so forth, and you can swipe in the one direction or the other direction and then offer different services on that, depending on whether or not this is something rentable that you just bought or not. So there are a couple of areas, and we're quite excited about the further expansion. I think we have a very good starting point, which is a very high relevancy with our customers. There's a particular reason people are doing business with us, and this is a phenomenal starting point.
Yeah, and last but not least, if you think back about, let's say, the whole journey from the idea of the Grover card until launch, how difficult did you find it as a let's say e-commerce company to actually move into the world of financial services and build up all the, let's say, internal processes, competencies, know-how internally to now deliver this to your customers?
So I must say that I found it very, well, I don't want to say easy, but we have a phenomenal team, right? So the Johan, for instance, the Grover CPO, our chief product officer, when I talked to him about the Grover card very early on, it wasn't like, oh, this doesn't fit the story, or this doesn't fit my product vision, or whatever, and so forth. He instantly and immediately understood it in a way, and then it was very easy to plug in a card team right there in the entire product delivery, which is just another team, if you will. What was hard is to stuff it up properly, and also to defend the resource consumption internally a little bit, right? So it's one of those things. If you're building something very new and you already have a big core business, you got to defend the new from the mothership. I think this is a very known behavior. But then we saw early traction, that things are developing, and then we last year with the addition of Stefan Bayer, our head of financial services, we really super boosted the development of the Grover card, right? We've been working with Stefan before with Visa and Solarisbank in this cooperation, but also once he joined, it was clear that we're going from marathon to sprint now, and the result is now the delivery of the Grover card to the market.
So hiring people with experience in the banking and financial services industry can clearly help on that journey.
Yes, of course. Yes, that's the number one thing.
Let me close with a last question from the audience. I guess a potential Grover customer who is asking, why don't you deliver to Switzerland?
Good question. Good question. I think it's a customs currency issue and so forth. But yeah, we want to deliver to Switzerland, definitely. If we can make it happen easily for us, we will. It's the same question as UK. Everybody's asking, when do you look at UK? But UK for us is the same as the US. So we launched the US first in terms of complexity, but it's a bigger market. But we will be in Switzerland, I promise.
Great. Thank you so much, Michael, for making the time, for coming on the show and sharing some insights into the Grover card journey and why Grover decided to move into financial services.